what's going on, guys? Bob Mentality here, and I want to bring a quick video to you today on the topic of tape reading. I haven't spoken too much about it specifically. I made a video in the past talking about the order book and kind of the pros and cons of that, but that focused more on level 2. I want to talk more about the actual tape and reading the tape and how you can use it as far as my extent of how I've used it in the past and how I look at it and its significance. So let me just start from the beginning here. So on the left here, we have a chart of Apple. We're on the 1 minute time frame, and you can see the current price, 159.20, and it's variating there. On the right side, on the top, we have the time and sales, which is what people call the tape, right? And then on the bottom here, we have level 2, which actually shows you the depth of the order book. So how these all correlate and the relationship between these is the tape on the top here on Apple is showing you which orders are going through. So the most recent order is the price of the stock. So if you look up here, as soon as this 159.19 goes through, you see that's the current price here on the left side on Apple, right? So the last order to go through obviously is the current worth or value of the stock, and it changes every second. A new candle here is printed any minute, but you can change that for the chart to update on any interval you want to, right? On the right, we have here the price of where the order came through and where it filled at. So to keep in mind, the time and sales is the history. So when you look at time and sales, this already happened. The level 2 is the orders that are currently listed to be filled or that haven't been filled yet, or they may not be filled if they're pulled, like the orders are deleted and removed from the book before they're filled and show up on time and sales. So keep that in mind. Just because there's an order listed here in the depth of the book does not mean it's going to actually be filled in the market and show up in time and sales. But if you look just at time and sales, this is only going to show you the orders that are filled. So there's no BS manipulation. As long as it pops up here, the order was filled and it took place. However, if you look on the bottom, you could see $1 billion order sitting out at the 159.29 that never gets filled because as soon as it approaches the current price, they'll pull it, right? Or it shows a billion size but only fills one share and then is removed from the book. So level 2 can be manipulated. The tape can't be manipulated in the same way. As long as you see the order here, the order's filled. Now you'll see there's green and red. That just means, did the bid hit the ask? So did the order fill on the side of the ask, and that comes up as a green order, a green colored order on the tape, or did the ask move down to hit the bid, which would be known as more of a bearish thing, right? Like an aggressive sell order. That's when this red shows up. You see all that red? That's when the bid was swiped versus the ask being swiped, if that makes sense, okay? So that's what we talked about. You've got the chart, you've got the time and sales, and you've got the depth of the order book, the level 2 down here. So on tape specifically, how can you use this in your trading, and what's the significance? So really, I see the most advantage in a short-term time frame. If you're looking to make an entry on a stock for a scalp, you know the technical demand or the technical resistance on the chart. You note that. Let's just say, for example, on Apple, there's going to be demand at 159, right, based on the chart. When the price gets close to 159 and you're looking for a long play, if you look at the tape, you want to see a lot of orders go through on the ask when we approach this 159. So you want to see buyers step in aggressively, swiping the liquidity, swiping the orders on the ask side, because that's going to show bidders coming in to buy aggressively as we approach 159. If we approach 159 and you see a bunch of red orders here, just like that, right, into 159, that's bearish because you're seeing a lot of people move down to swipe the bid as we're seeing quick accelerated selling. Ideally, what you want to see is us approach the 159, and if obviously price holds, or let's say 159 doesn't hold and it snaps below into the high 158s, right? Then you want to see aggressive green come in, aggressive buy orders hitting the ask, and then the price jump back above that 159. Because if you don't see that, you're going to ideally see lower prices. or if the price stalls and we just sit at 159, but all you see is just red, aggressive orders moving down and swiping that bid, and the bid here shrinking on the size that's showing, and then you see a thinning of orders on the level 2, meaning instead of it being 120 or 159.24 and then 159.23, it just goes to like 159 and then 158. Then that's a thin book, and chances are you're going to see lower prices because the selling's really aggressive. That's kind of some of the things you need to look for on time and sales. And vice versa on the short side. If you're looking for a short entry and you see a lot of orders swiping, a lot of green orders just like this, swiping through the higher prices or swiping through that current ask, chances are that's a lot of buying pressure. And it's only a matter of time before higher prices are demanded and they thin out that size on the ask, right? That's a very general idea as far to look for in tape reading. On the short term, you want to see a lot of size, a high size orders. You see the size here on the right side next to price. You want to see high size in an aggressive way in the direction you want the stock to move. And if you don't, that could be an indicator we're going to go the other direction, right? Excuse me. Another thing you can do on the size, you can select, well, let's say I don't want to see 1 share lots, right? You only want to see 300 share lots or 500 share or 1,000 share lots. You can change this to eliminate some of the noise on the time and sales. Why? Because chances are where the big money's betting and the larger order sizes are coming through on the time and sales, that's where the advantage is going to be in that direction, getting on that side of the trade, okay? So you can select this to only show a certain amount of sizes. This would be important to do because you don't want to see small size lots. You know, anybody can buy 100 shares of Apple, but not anybody can buy 1,000 shares of Apple, right? That'll help you eliminate the noise in your short-term scalping and your short-term trading. And another thing you can look into is dark pool orders. So orders that go through exchange to exchange or off the book, right? That's important to search. You can use programs like Flow Algo to look at dark pool orders, or option sweeps is another one. Because if if they want to buy 500,000 shares of Apple, they're going to probably buy it direct or dark through a dark pool. And you would want to have a specific software or application that can see those transactions take place and feed you that information. You're not going to see it here. You're probably not going to be able to see it here. So you want to look for huge dark pool orders to aid you if you're looking to swing trade. Why is that important? Because for a scalping perspective, if you see short-term demand at 159 on Apple and you see a lot of size orders come through here, that's not really going to help you over the long term. But if you see day-to-day large dark pool purchases or sells, that's going to help your swing trade mentality and using the time and sales and the orders that actually occurred in the long term. Level 2 is not going to be as huge. It's not going to aid you swing trading, right? It's only for the scalping, and mostly time and sales is for the scalping too, short-term entries. Unless you're looking at those large orders over time, like you would find scanning dark pools. Okay. One more thing I want to go over is manipulation. You can still see manipulation in time and sales in different ways. That's why you need to be very specific on your time frame. Like I said, look at larger size lots and understand that just because you're seeing like the price right now, is pulling back into the 159 and we saw a lot of red there. Just because you're seeing a lot of those moves hit the ask or hit the bid, if the bid's not going anywhere and you continue to see people stack up on the level 2, that could be a bullish indicator as well. So just because a lot of size is hitting the ask doesn't necessarily mean it's bearish. You need to take into consideration a lot of external factors in the trend over days, over hours, over minutes into your trade, and not just rely on the tape. I highly recommend taking some time and just watching orders come through and watching how it correlates with the price, watch how it correlates with the volume, and just get time watching it, because that's when you're going to be able to understand when to hop out of the trade, the scalp, right? And when to hop in. Once you've seen seen the interaction, the relationship between the data, right? Then you'll be able to get a better feel for that. And it's going to take some time, and it's too much information for me to dive in just one video. I may need to make another one. But this is kind of the I guess intro to tape reading, right? And there's a million people out there that are better than me. This is just my understanding of how I use it, and how you can too. So if you have any questions, leave them in the comment section below. I'm going to go ahead and get out here, guys. Remember to stay focused and develop that bot mentality, which is a trading mentality where you learn to eliminate your emotions so you can trade like a machine, guys. I'm out of here. Deuces.